Welcome to Tax File. I am your host, Laure Bala Hassan, and today's episode is filled with insights you don't want to miss. We'll start with the latest tax news to keep you updated on key developments. In our Did You Know segment, we'll share some fascinating tax facts you may not be aware of. Then, time for our Vox Pop segment, where we hear directly from the public on pressing tax issues. In the Knowledge Zone, we'll take those views further and break them down in details. Our Professional Insight segment will feature expert perspectives to guide you through tax complexities. And to wrap it up, what's on the net? We'll respond to your questions and comments from our social media handle. It's going to be an enlightening ride. Let's dive in. Now, the news. Within 2 weeks of going live, 1,000 and counting out of 5,000 Lagos taxpayers in the large tax category have onboarded, integrated, and are now transmitting on the e-invoicing system, marking a 20% compliance in sectors such as oil and gas, telecoms, banking, and manufacturing services. This cheering news was made public by the Acting Director, Tax Automation, Mr. Mike Adoga, during the Stakeholder Post-Go-Live e-invoicing workshop held in Lagos. He stated that this milestone achievement offers a wide range of benefits to taxpayers, which include transparency, less audits, and enhanced voluntary compliance. Mariam Julie Adura was there and now reports.
Mr. Adoga and his team explained that the post-go-live stakeholder workshop became necessary in order to offer support to taxpayers, provide response and solutions to their questions and their concerns. Participants at the workshop, made up of taxpayers, access point providers, and tax consultants, expressed their excitement about the e-invoicing system and gratitude to the FIRS for organizing the workshop, which gave them the opportunity to get clarification on the processes. The e-invoicing system, also known as the Merchant Buyer Solution, seeks to digitize tax administration, promote transparency, and reduce leakages to the barest minimum. The deadline for large taxpayer onboarding has been extended to the 1st of November 2025 to give more time for compliance.
And still on e-invoicing, the Merchant Buyer Solution, also known as e-invoicing, has been described as an innovative method to reduce audits, enhance efficiency of doing business, and better planning on the part of government. This was made known by the Chief of Staff to the Executive Chairman of the Federal Inland Revenue Service, Mr. Tayo Koliosho, during a press briefing as part of activities marking the e-invoicing Stakeholder Post-Go-Live workshop held in Lagos. Mariam Jude Adura again reports.
Mr. Koliosho said the large taxpayer group is the number one focus for the Merchant Buyer Solution because they are the most organized group of taxpayers. He said this first phase is a learning curve which will be improved upon going forward, with the view of bringing it to par with the world's best e-invoicing solutions.
Electronic invoicing initiative started over a year ago. So we've had a lot of consultation with each of the segments, and we've been drumming it on them on the need for us to start. We are all not going to be ready at the same time, but we feel that where we are now and where the world is in terms of adopting this platform and these standards and framework, because a lot of businesses have gone digital. So we've been with our customers, taxpayers, especially the focused large taxpayers. We've been working together, and we believe that all our consultations over the year has yielded the level of enthusiasm that we've seen. Over 1,000 companies have already integrated, which is about 20% of the large taxpayer population.
In a sweeping tax reform under the newly enacted Nigerian Tax Act, the federal government has abolished the 10% capital gains tax by repealing the Capital Gains Tax Act. and merging it to the broader corporate income tax CIT system. The CIT remains set at a flat rate of 30% for all companies except for small businesses. Ejura Etu Opanachi has the details.
Under the new Nigerian Tax Act, which is slated to take effect in January 2026, small companies with annual turnover of 50 million naira or less and no more than 250 million naira in fixed assets will continue to enjoy a 0% tax rate. Notably, firms offering professional services such as consulting, planning, or support are explicitly excluded from the small business classification, regardless of their turnover or asset size. The law also introduces a minimum effective tax rate of 15% for certain large firms. Any company with a lower effective rate must recalculate and pay up to reach that threshold. This requirement applies to multinational enterprise (MNE) constituent entities, as well as companies generating 20 billion naira or more in annual turnover.
Let's join Mariam on the Vox Pop segment.
Hello and welcome to the segment. My name is Mariam Adura, and today we will be finding out what the Police Trust Fund levy is. Want to know more? Come along with me. What is Police Trust Fund levy?
Police Trust Fund levy is a levy that is imposed on the net profit of all companies operating businesses in Nigeria. Section 41B of Nigerian Police Trust Fund Act provides that all companies operating businesses in Nigeria are to pay a levy of 0.005% on their net profit in Nigeria. And also Section 4, subsection 3 of the Act empowers the Federal Land Revenue Service to assess, collect, account, and enforce the payment of the levy and remitted to the fund. All companies operating businesses in Nigeria are liable to the payment of this Police Trust Fund levy, whether a small company, as defined by CETA, non-profit organizations, or non-resident companies. So all companies that operate, once they operate a trade or business in Nigeria, are liable to the payment of Police Trust Fund levy. Thank you.
Police Trust Fund levy, it's a levy imposed on the net profits of all Nigerian companies in Nigeria. And the proceeds is used for personnel trainings. It's also used to procure security and equipment for the police officials. Then it's the levy is 0.005%.
Police Trust Fund levy is a levy empowered by the Nigerian Police Trust Fund Establishment Act of 2019 that empowered all companies operating in Nigeria to pay the levy on their net profit. And Section 4 of the Act, subsection 3, empower FRS to collect, assess, and account for the levy in order to support the police constructions, to build some police stations and to support the security agency.
Ma'am, what is Police Trust Fund levy and why is that levy collected?
Police Trust Fund levy is a levy collected by the federal government to help support training and retraining of police personnel. It also helps to procure arms and police uniform. It also helps to renovate and construct police stations and police barracks. And it's meant for the general welfare of the police personnel.
What is Police Trust Fund levy?
Police Trust Fund levy is a levy collected, imposed on the net profit of companies operating in business in Nigeria. It is assessed, collected, accounted, and enforced by FIRS on the net profit of these businesses in Nigeria. and it is at a rate of 0.005%.
Did you know the Nigerian Police Trust Fund Act was passed by the National Assembly in April 2019 and signed into law by the President on the 24th of June 2019? For more information, please visit www.firs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into interesting conversations earlier had on the streets. I remain your humble host, Ashu Abe. Today we'll be discussing the Nigerian Police Trust Fund Levy. The Nigerian Police Trust Fund Levy, NPTF, was established by the Nigerian Police Trust Fund Act of 2019 as amended. This act imposes a levy of 0.005 on the net profit of companies operating businesses in Nigeria. All companies operating businesses in Nigeria, including small companies as defined under the Company Income Tax Act, non-resident companies and non-profit organizations that carry on trade or businesses in Nigeria are liable to pay the NPTF levy. The Federal Inland Revenue Service shall assess, collect, account, and enforce the payment of this levy. The effective date for the implementation and enforcement of this provision shall be the 1st of January 2022. This implies that NPTF levy shall be chargeable on the net profit of 2021 financial statements of all companies operating businesses in Nigeria.
And now to our Professional Insight segment.
My name is Joel Sabo Gosar, PhD, and a fellow of the Institute of Chartered Accountants of Nigeria, and equally a fellow of the Chartered Institute of Taxation. I'm the Director, Internal Affairs Department. A lot of people find it difficult to know what Internal Affairs Department is. They most at times look at it as audit, but FIRS in 2005 mirrored the Mauritius Revenue Authority, where we got the name Federal Internal Affairs Department. And the department is divided into 4 divisions. We have 1, Internal Audit Division, 2, System and Forensic Audit Division, 3, we now have the Value for Money Audit Division. Then the next one is Quality Assurance Division. Then we equally have the Financial Audit Division. In summary, the System Audit Division look at all the IT infrastructure that we now have in the service to ensure that they serve FIRS, make sure that there are no downtime with respect to taxpayers filing, and ensure that all payment processes are working and are seamless. Then for Value for Money, we are looking at any amount of money that we are spending as we receive from Accountant General Office, that we account for it and make sure that any money spent, FIRS is getting value for it. The Quality Assurance look at the manuals, which are the procedures that are supposed to be adhered by FIRS. We develop the manuals in collaboration with the respective departments, and we sign off with them. And that operational manual is supposed to be the guide that each person is supposed to have on his table as an FIRS staff. And on a quarterly basis, we go around to monitor to ensure that what you document is what you are implementing, to make it seamless that when taxpayers come around, what they will now find operational in Tax Office A will now be the same thing in Tax Office B. For the Financial Audit Division, we look at the bank reconciliation of the service, the management account, the trial balance, to make sure that all the activities are done and clearly mapped before the external auditors will now come. Then for the internal audit division, we now look at the prepayment, where payment vouchers which are generated from F&A will now be sent to the auditors, and the auditors will audit them to make sure that the approvals are correct, the amounts are the way it's supposed to be, and the person who is approving has the requisite authority to approve, because we have threshold. And that is to ensure that you cannot start a process and then you end it. Yes, FIRS has a policy and a charter in the FIRS. And in the charter, you now see the internal affairs reporting directly to the audit committee of the board, which is chaired by the chairman. And the direct report is to enable them to be independent. There you will now see the purpose of the department, the scope of the department, the authority, and how the activities are being carried out. It should interest you to know that the Internal Affairs Department is seen as the watchdog of the service to ensure that all controls are being maintained and those controls are seen working. So that charter specifies those directives. For us as a department, we shift away from looking at internal auditors as enemies. Like some people look at it because they are now looking at, oh, you are just looking for fault. But what we try to make sure that our auditees understand is that we are corrective mechanisms we are putting in place to ensure that the rules and regulation guiding any transaction is followed. It is for us as a service to ensure that we're effective, we're efficient, and ensure that rules and regulations are binding and they are working. In our payment process, we have a sub-audit model where the payment vouchers are audited electronically. But because of regulatory bodies and people we report to, like the Accountant General Office and then the Office of the Auditor General for the Federation, we have to still maintain the hard copy payment vouchers. So until the law change to now say discontinue the hard copy, we'll have to continue to do a parallel run. So we'll now have the electronic, and then we equally now have the manual working concurrently so that we don't go against the law. And equally, we use audit command language to enable us now analyze transactions. We pick the transactions and then we use that tool to analyze for management decision. Yeah, part of the challenges we face as department is acceptance by the auditees, because the auditees are just interested in making their payments irrespective of whether the documentations are right. But we say, no, you have to now follow the procedure. So when you query a file, the auditee look at you as being hard, and you are now not allowing them to get their money. But because we are stewards, for any seat you find yourself on, is to make sure that the law is followed. So we have that challenges. But usually what I do to make sure that people get to understand is, I move from my desk to the person who will query his file. Take time to explain to the person, these are the procedures you are supposed to follow. And this is why we are now querying this file. One, to enable the person to know so that he doesn't make that mistake again. And it may interest you that despite the challenges we are having, the chief executive, Dr. Zach Adedeji, PhD, is a very controlled person. Because there are instances where I query a file, and then he now told the person who brought it and now said, I stand with the position of the auditor. So that independence is there. In other climes, you discover that they will now say the auditors are not independent because the chief executive will now say, I hired you. So why should you now question me? But in this our own environment, it is not like that. One, he's an accountant, a chartered accountant, and he knows the law. So he allows the law to flow. So it gives us that kind of moral buster to now tell people that this is the way. Yeah, there are quite success story. One, let me now give you the recent one. My auditors are the people that audited the EOI, that's Exchange of Information, for recertification of ISO 20001-2013, and then the upgrade to ISO 27001-2022. When we now did the audit, the external auditor came and he could not find any non-conformity. So it's a plus. And there are a lot of cost savings with respect to our transactions. There are people that transactions with the amount they are claiming they have worked, but when we verified, we discovered that there are some items that have not been done. So we don't pay such transactions, so it gives room to a lot of cost savings. And we try as much as possible to do technical sessions for other departments where we discover that they have high volume of queries. The essence is for them to come on board and appreciate the workability of the system. With respect to our function as Internal Affairs Department, with the manual I've mentioned before, which is developed by the department in collaboration with other departments, that give each office of the tax office the responsibility to interact with the taxpayers, to know that the rules guiding, filing, assessment, and everything are documented, so that the taxpayer will know this thing with ease. When he walks into a tax office, he will not have any problem to now begin to say, oh, what the treatment I receive in tax office A is different from the one in tax office B. So that law, that procedure is to be seen, to be transparent, and we have experienced it. And along with that, once in a while, we now go out to now interact equally with the taxpayer, get their feelers, whether the manual is actually working as documented. And the feelers we've gotten so far are very positive.
Over to Swateku for what's on the net.
Good day and welcome to What's on the Net. At Talk to Mercy is asking, how does the new amendment address VAT on transportation? At Talk to Mercy, the new amendment in Nigeria addresses VAT on transportation by exempting public transportation from value-added tax. This move, announced by President Bola Ahmed Tinubu, aims to ease the burden of costs on households. So public transportation, along with rent and renewable energy, will be fully exempt from VAT. Additionally, essential goods and services like food, education, and healthcare will enjoy a 0% VAT rate. This change is part of the government's effort to reduce the cost of living and promote economic justice. At Leadership is asking, can you make me understand how this newly signed law impacts the Nigerian economy? At Leadership, President Bola Ahmed Tinubu has enacted 4 transformative tax laws designed to simplify compliance and accelerate growth. Highlights include tax relief for low-income earners and small businesses, stronger support for key sectors, and a push to attract investment in Nigeria's digital and essential service economies. The goal, you may ask, to boost revenue, build investor confidence, and steer Nigeria towards a $1 trillion economy by 2030.
Brings us to the end of this episode of Tax File. Hope you are living with fresh insights and a clearer understanding of today's tax matters. But the conversation doesn't stop here. Join us on social media to share your thoughts, questions, and experiences. We are always ready to keep the dialogue going. Until next time, I am Lore Bala Hassan. Stay informed, stay compliant, and keep watching Tax File. FIRS, simplifying tax, maximizing revenue.